Good evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday, the 12th of November, 2024, just after 6:35 p.m. Central Time. Well, if we take a look at what's going on here, we'll start with the dollar up 49 points, and we saw interest rates again higher today. That should have weighed on the gold, and it did. And the gold market went down into the 2606 level on the close. But most important to me was on the weekly chart, you actually went down to around the 2595 level, and same in the D's contract, and hit the 18-week average of closes, and the market held it on the first attack. One attack doesn't prove anything, but that's the zone where I'm looking for the support to come in. We are looking today at the stock market down, and it was down pretty hard today. Not a crash, but just down hard, and I expected that. If you'll recall, I talked about the Tuesday reversals. Now, the Tuesday reversal is a stock phenomenon. It doesn't always happen in other markets. This is the one where it's the most reliable, but a lot of people apply it to others, and they'll say if you were down on a Monday or up on a Monday very big, you get reversals on Tuesday, and they count on it. I look at it, and I count on it, but not a lot. What I count on is you're not going to get the thrust if you were going down, another thrust that big, and that often is the case. But in the stock market, I do look for the turn. You're still having trouble going anywhere in the foreign currency market, and that's because the market is waiting to see does China do anything. And as long as they don't do anything, you've got a problem, and you see that in the copper market most. Now, the copper market's retreated dramatically. This is $1 a pound off its recent highs, down. So you want to pay attention to that. Tomorrow, by the way, in terms of news, you're going to get the Mortgage Bankers Association number at 6. I can't imagine it's going to be a good set of numbers. We're going to get, though, an important number in PPI and CPI. CPI first on Wednesday, PPI on Thursday. And the markets are going to look real hard. Is inflation falling, giving the Fed reason they can still do things, or is it starting to climb? And that was what? In order to climb, if it starts climbing, the Fed's tool to stop that is tightening, not loosening of interest rates. Keep that in the back of your mind. There's a big battle going on in traders wondering what the Fed's next move is. Trying to guess that on November 12th, when you got all this data forthcoming, including jobs data, by December 17th, when the meeting is, no. You don't have to commit just here. But as a trader, you have to be watching. And as a trader, all I keep seeing are yields are back up in the 10-year note to 4.4%. That is not conducive, in my opinion, to a Fed wasting a cut. A weakening economy is where you make the cuts, not when it's tightening and the economy staying strong. API numbers will come out at 3:30 in the afternoon. Everything got pushed back, a lot of numbers, remember, because of the Veterans Day holiday. Now you're going to get also some financial budget news. What's the size? Where are we running the deficit? It looks to me like it's about 4 times the size. You heard me, 4 times the size of what it was last month, but we'll get that report tomorrow as well. And there's a lot of Fed members going to speak. So be ready. I write about that each day and give you an area called Fed Talk on what each member is talking about. So coming back to what we're about here, the charts. The gold market down about 90 cents, silver gaining on a little tonight, and copper up about 100 points. When you look at the gold, on the weekly chart, the support's 25.72.90. It is higher on the other charts that I'm looking at. So you want to look at that. We will see just where you're at. When you take a look at the daily chart, you can see that the momentum to the downside, all there. The market coming in right through here. Where's the Bollinger Band bottom? You're still running it. You've got now 3 days in a row where you're basically at the Bollinger Band. As we talked about, let's go back here, yesterday. This is yesterday, Monday. Said if the market extends, we look for the possibility of getting into the 25.64 level or the Bollinger Band. You're under the Bollinger Band today, and you're under it still tonight. So the market is extended. It has gone from roughly the 2,800 level, as you know, $200 an ounce almost down. And it happened in very fast order, in part due to ideas here that Trump spending is going to cause interest rates to stay higher for longer. And interest rates and a strong dollar work against the gold, and that's how you look at what has happened. And for a long time, anticipating a Trump victory, the market rallied. It changed its corner when he actually won. Buy the rumor, sell the fact, I guess is what it was. And you are oversold. Don't pick a bottom. Let the market form its bottom before you commit, would be my advice. The gold-silver ratio still shows gold stronger than silver, even losing back some. It would have to get under 82.97 to convince me different. In the silver market, you're already down, unlike gold still may be going to reach it, the 100-day average and the Bollinger Band. And the market, as you can see, is showing some reluctance. That's the only word I could use. I can't say that major support. It's showing reluctance to break more, but you got to keep your eye here. If this turns around and embeds with both the blue and the red line after 3 days staying under 20, you could have another down leg that carries you into the 200-day average. So I still don't see anything friendly here. In the copper market, you again are coming down. You can get a bounce, but maybe you're trying to get over the Bollinger Band. There's absolutely nothing friendly in this market. And as I said, this market depends on which month you looked at. The D's contract was as high as 480, and now you're sitting here in this market at tonight 414. So you are down in the market 65, 70 cents, as you can see. That's quite a bit. Platinum gave up as well. So the platinum couldn't even hold. It tried its darn best for 3 days, and then when it closed underneath the 200, the 100, and the 18-day average, it's just been letting go. What you're looking at now is classic liquidation. Traders that are caught are just throwing in the towel saying, I got to get out of this market. I can't let it keep bleeding away and hurting my trading capital. And that's exactly what I think is going on. And in the dollar index, the market is just pushing to new highs. It is overbought. I do not believe that you sit there and you chase Bollinger Bands. I think you get yourself into trouble doing that type of trading. So I'd be very cautious here. And we'll see what the markets offer in the morning. That's about all that I could really say about it. A lot of trepidation as to what's going on here, because as rates go higher, it supports the dollar. The dollar going higher doesn't have to support this. This has to do it all on its own, the bonds and the notes. And it's doing a heck of a job for the Fed. But I promise you, it's giving question marks to a lot of traders. Should the Fed be cutting rates? If the real market's saying you have to have higher rates to attract capital, and the Fed says, I'm going to cut rates, all they're going to affect is the 2-year and shorter duration. The long term, their actions won't affect that. And in the long term, if the Treasury wants to keep attracting and needs money, this is where they go. Medium to long term, you can go short term. That's probably their best bet right now. But what do they have to get for that in order to get the buyers out? We'll see what goes on. Not much more to be said tonight. I'll catch up with you in the morning.